Welcome to our AUD/USD analysis report covering the period from September 29th to October 4th, 2025. I'm your host from FXTech, bringing you the latest insights and trading recommendations for the Australian dollar against the US dollar. In this presentation, we'll examine recent price action, technical patterns, fundamental drivers, and provide actionable trading strategies. Let's dive in. The Australian dollar showed modest strength during the week, closing at 0.66022 with a weekly gain of 0.81%. The currency pair traded in a relatively narrow range between 0.65891 and 0.66142, consolidating after its recent rebound from the 0.6519 level. Technical indicators currently present a neutral outlook, with price action hovering near the critical 0.6627 resistance level that has capped upward momentum. The pair continues to find support from the 55-day EMA at 0.6554, which has proven to be a significant technical floor in recent sessions. Looking at the technical picture, AUD/USD has rebounded from 0.6519 but struggles to break through the 0.6627 resistance decisively. This price action has formed a potential head and shoulders pattern on the daily chart, which traders should monitor closely. Our technical indicators show neutral readings across oscillators and moving averages, though the weekly MACD displays a bullish divergence that could signal building upward momentum. Key resistance levels to watch include 0.6627, 0.6706, and the critical Fibonacci retracement at 0.6713. Support is found at the 55-day EMA, 0.6554, the recent low of 0.6519, and the cluster support at 0.6413. Several key fundamental factors are currently influencing the AUD/USD pair. The weakening U.S. labor market, with ADP reporting job losses in September, has reinforced Federal Reserve rate cut expectations, generally weakening the U.S. dollar. We're seeing a notable divergence between Fed policy, increasingly dovish, and RBA policy, relatively hawkish, which continues to support the Australian dollar. China's economic health remains crucial for the AUD as a commodity currency, while global risk sentiment has been cautious amid U.S. government shutdown concerns. Commodity prices have shown mixed performance, adding another layer of complexity to the AUD/USD outlook. In the short term, over the next 1 to 2 weeks, AUD/USD is likely to remain in a consolidation phase between 0.6519 and 0.6627. Our analysis suggests two primary scenarios. In the bullish case, with a 60% probability, a decisive break above 0.6627 would target a retest of the recent high at 0.6706. This would suggest that the pullback from 0.6706 has completed as a correction. In the bearish scenario, with a 40% probability, sustained trading below the 55-day EMA at 0.6554 would confirm rejection at the 0.6713 Fibonacci resistance and potentially trigger a deeper decline toward the 0.6413 cluster support level. Looking at the medium-term outlook over the next 1 to 3 months, AUD/USD remains cautiously bearish as long as the pair stays below the critical 0.6713 Fibonacci resistance level. However, several bullish indicators suggest a potential trend reversal, including bullish convergence in the weekly MACD, strong rebound from 0.5913, and maintained gains above the psychological 0.6500 level. Our bullish scenario, with a 40% probability, sees a sustained break above 0.6713, confirming a bullish trend reversal and opening the path toward 0.6941 structural resistance. The bearish scenario, with a 60% probability, suggests failure to overcome 0.6713 could lead to extended range-bound trading or a deeper correction toward the 0.6400 area. Based on our analysis, we offer 3 distinct trading strategies. For conservative traders, wait for a clear breakout above 0.6627 before establishing long positions, with stops below the 55-day EMA at 0.6554 and targets at 0.6706 and 0.6713. For aggressive traders, consider layered buy entries between 0.6570 and 0.6600, with a consolidated stop below 0.6550 and a primary target at 0.6680. Take partial profits at 0.6650 to reduce exposure. For contrarian traders, look for shorting opportunities if price fails to break above 0.6627 and shows rejection patterns, with stops above 0.6650 and targets at 0.6554 and 0.6413. Remember to follow sound risk management principles. Never risk more than 2% of capital per trade. Use stop losses for all positions, and monitor key economic data releases that could impact the pair.